Good morning, ladies and gentlemen. Welcome to the show. Today is the 8th of Monday, the 8th of November 2021. Thank you for tuning in. Glad to have you guys here. Now, I am going to talk about the Chinese real estate developers, and one of the set lines, I want to get you guys to understand the set lines of where if China goes down past a certain point where it's going to be big trouble. And I'm going to explain to you guys what that set line is. And the first thing we're going to do is well, this is contagion. And how contagion works within the financial system is it starts out slow. Maybe one company gets in trouble or one bank gets in trouble, and contagion starts to move through the system. And in China, that's exactly what's happening. But it's a slow motion process at first, And what you get is you get a lot of people out there saying, oh, this contagion won't spread. The same thing happened in 2008. They say, oh, the contagion won't spread, past a certain point, and we're okay, and everything's going to be fine. And this is the mantra that they put out there, is that the contagion's okay, it won't spread. But it is spreading in China right now. And so what's going to be the red line that they cross in the sand, like I mentioned at the start of the show here? What's that red line they cross? I'm going to explain to you guys what that is. And then we're going to move into the markets and talk about what's going on in our markets today with the regular market report. So let's get started. Let's open up the charts right here. The computer's lagging just a little bit, guys. Okay, we're open. The charts are open. Evergrande and the Chinese real estate developers are already in trouble. Okay? And you notice they're using the term now real estate developers because it's what we're seeing is dominoes fall within the Chinese real estate market with these real estate developers. And of course, at a certain point, in order to maintain liquidity, they're going to have to start liquidating certain properties. And this is going to affect the property sector in a very negative way. But this takes time. Like I say, this all takes time while the dominoes fall. Now, what's happening over here in the West is our market has been going through a melt-up, a very bullish period over the last number of days, And so we are actually reaching overvaluations that we haven't seen except for 2 times in history going back to the 1930s. I was looking at the charts and the PE ratios and stuff like that last night, and right now we're reaching a peak similar to what we did in the dot-com crash was the last time. And then going back before that, it was the stock market crash of 1929 was the last time we reached these kind of peaks in these ratios. Now, here's the thing. Over in China, as this bubble starts to pop in their real estate development, there's a certain red line that they can't cross. And what this has to do with is, very specifically, I'll explain it to you guys. Over here in the West, when people put down payment down on their homes to the bank, they typically put like between 3 and 6% down payment. So that means most of the leverage of their loan is being carried by the bank. But in China, it's different. They have a significant savings rate in China. The significant savings rate that they have is over 33% of their net income their disposable income, I should say, they put into savings every year. And so they make a significantly higher down payment on their homes when they buy a home. What this means is it means that the bank is not carrying so much of a load, and also if the home prices fall, they're not in negative territory quite so quick like over here in the West. Because in the West they have much less invested, the initial investment, and most of it's being carried by the bank. But in China, they put 40% down when the people who buy a home, typical home buyer in China. In China also, this housing market, well, what that basically means is, guys, is the home prices has to drop probably by at least 40% before the bank is going to start to feel it in China. So the people are going to feel it, and they're going to let this fall on the people. The wealth of the people is this investment wealth that the people have is they're the ones that's going to take a hit, not so much the banks. So in this crisis that's unfolding slowly over in China, it's also going to affect the GDP because the real estate market is basically 29% of China's GDP. It's over a $60 trillion industry. And so as this rolls over and as property prices start to fall, we have to watch very carefully that they don't fall more than 40%. Now, worst case estimates right now could be between 20, maybe 30%. These are estimates only. But as this thing starts to gain speed and momentum in China, we could actually see these the real estate market fall by more than 40%, even though they're thinking, oh, it'll never do that. But then we're going to be in trouble, because then it starts to chop into the banks in China. And so as it also represents over 20% of Chinese, 29% of Chinese GDP, it's also going to affect Chinese GDP. If Chinese GDP falls below, for 2 consecutive quarters, below negative, then China's in an official recession. So these are the factors we're watching for. Let's move on to the markets now, and let's take a look at the silver price today. It's up 12 cents in the day so far, 24.27. So all those falls we've seen in prices in silver, like last week or whatever, they're gone. We're right back to where we started. You know, so if you guys were able to get a little bit of physical silver during that period in time when it was down a little bit, you did good, you know. Okay, let's take a look now at cryptocurrencies today, and cryptocurrencies have been exploding in price. It's finally getting up near $3 trillion. It's at $2.864 trillion right now for the industry, and it's trudging higher all the time. It's amazing what cryptocurrency's been doing lately. Okay, let's move on now and take a look at the Dow Jones, and the Dow Jones is up 68 points today in this melt up, 36,283. We got to watch what's happening in China. What's happening in China could very much impact this over-bloated market that we have right now. Let's take a look now at crude oil. Crude oil is at 82.03. It's up 76 cents on the day. It's up almost 1%, 94% of 1%. So crude oil is heading toward $90 right now. So you're gonna see it, the price at the pump, go up. Probably, well, it's heading for $4 a gallon, basically, guys. Probably not too long in the distant future. Okay, let's take a look now at the MOVE Index. MOVE Index is at 66.90. We've seen a little peak in the MOVE Index there. It went up to a maximum of 78.34, but now it's come back down a little bit again to 66.90. Now we're going to take a look at bonds and rates. And bonds and rates are doing okay. They don't seem to be budging to the upside too much. We're looking at a 10-year. It's under 1.5%, 1.48. It's up only 3 basis points today. And a 30-year is at 1.9. And it's up 1.9 basis points. But if you notice that 20-year, is at 1.915. So it's a little bit higher than the 30-year. So this is an inversion on the long end of the yield curve, and I look at this as an indicator. And the bond market, you know, can sense, the investors in the bond market can sense patterns in the financial system a little bit better than the stock market. The stock market can get caught up in things like irrational exuberance, and that's where we're at right now in the stock market with this melt up. Let's take a look now at the U.S. dollar index at 94.12, and we're seeing the dollar starting to fall right now, and it's fell 1/5 of 1%, or 21 basis points of 1 penny. And so it's fell like 1/5 of 1 penny today. 94.12, but it's continuing to fall. Now this is bullish for gold today. The dollar's typically when the dollar's falling, there's an inverse relationship between gold and the dollar, and that's because they're both nemesis of each other. Okay, guys, thank you for listening to my show. Hope you guys have a great day out there, and we'll catch you guys in the very next episode. Bye-bye.